1999. Warren Buffett stands in front of a room full of technology investors. He says, "You're all going to lose everything." They laugh at him. For 2 years, they watch their tech stocks double and triple. Buffett's Berkshire Hathaway owns insurance, candy bars, furniture stores. Old economy, boring. Magazines put him on the cover. "Warren, where's your internet?" Then 2001 happens. NASDAQ crashes nearly 80%. Trillions of dollars gone. Those laughing investors? Many go bankrupt. And Buffett? He gets on a plane, flies back to Omaha, and buys the entire world for pennies on the dollar. What did he see that nobody else saw? Not genius, not luck. 7 simple laws. Laws so powerful that if you follow them for 30 years, a bus driver becomes a millionaire. Let's begin. Law number 1. Never lose money. A student once asked Buffett, "What's the first rule of investing?" Buffett said, "Never lose money." Student asked, "What's the second rule?" Buffett smiled, "Never forget rule number 1." Sounds silly, but he doesn't mean try not to lose money. He means design your entire system around the certainty that losing money is unacceptable. Here's a story. In the 1980s, Buffett wanted to buy Coca-Cola. The stock was $38. He calculated the real value at $48. What did he do? Nothing. He waited for a whole year. The price dropped to $35. Then he bought and held for 40 years. That's the margin of safety. Most investors do the opposite. They see a stock going up, they buy. They see a stock going down, they sell. That's not investing. That's gambling with your future. Remember, lose 50% of your money and you need 100% return just to get back to even. Ordinary people can't do that, but Buffett can by never losing in the first place. Law number 2. Learn what investing really means, its true nature, its risks, and its hidden dangers. Here's the truth most people never hear. Investing is not a lottery ticket. It's not a hot tip from a cousin. It's not buy low, sell high magic. Investing means owning a piece of a real business that makes real products and real profits. That's it. But to do that safely, you must learn how to read a balance sheet. It's not hard, I promise. How to know if a company is dying or growing. How to control your fear when the market crashes 30%. How to control your greed when everyone around you is getting rich fast. Without learning these things, you're not investing, you're gambling, and the house always wins in the end. The richest investors on earth, Buffett, Munger, Dalio, all agree the most dangerous thing is thinking you know it without ever learning it. And this is exactly why I created something for you, the Complete Investor's Manual Definitive Edition. Imagine having a map that shows you exactly where to go, step by step, no confusion, no fluff. Inside, I put everything I learned from reading over 200 books, losing real money, living through multiple market crashes, and finally figuring out what actually works. You'll get the pre-buy checklist, how to value any company, the asset allocation for any age, the 15 behavioral biases that destroy most investors, and the crisis playbook when the market crashes and everyone is panicking. Plus 50 templates, 200 book citations, and 20 questions to ask any financial advisor. I don't want you to buy this book. I want you to get it, because it's not a product. It's the result of days and weeks of writing, editing, and testing. The price is tiny compared to the effort I put in, and compared to the thousands you'll save by not making my mistakes. The link is in the description. Go get your copy. It will be the last investing book you'll ever need. Now let's continue with the remaining laws. Law number 3. Treat stocks like businesses, not tickers. Warren once bought a farm. He visited it exactly once over 30 years. A friend asked, "Aren't you worried?" Buffett said, "The farm doesn't grow faster when I stare at it. It produces year after year. I just read the annual report." That's the secret. A stock is not a flashing number on your phone. It's a piece of a real business. The ticker buyer checks his phone 40 times a day. He panics when the market crashes. The business buyer checks annual reports once a quarter. He gets excited when the market crashes. His favorite business is now on sale. Ask yourself, do you know the price-to-earnings ratio of the last stock you bought? Have you read its balance sheet? If not, you're walking through a casino blindfolded. Law number 4. Only operate within your circle of competence. In 2000, a journalist asked Buffett, "Why don't you buy Google?" He said, "Because I don't understand it." The world laughed at him. For 16 years, he stayed away from tech. Then, after years of reading and learning, he bought Apple in 2016. That single investment has made over $160 billion. The lesson is not that he was right. The lesson is that he waited until he was sure. He learned, then he acted. What's your circle? What do you actually understand? Not what you heard on a podcast, things you could explain to a 12-year-old. If your circle is empty, expand it slowly. Read one annual report, understand one business, then buy. Never buy anything just because your cousin recommended it. That's the fast track to broke. Law number 5. Be fearful when others are greedy, and greedy when others are fearful. March 2020, COVID pandemic. Markets drop 30% in 3 weeks. Headlines scream, "The end of capitalism." What did most investors do? They sold everything in panic. What did Buffett do? He bought airlines, banks, the whole market. 6 months later, the market was at all-time highs. The people who sold at the bottom missed the best 6 months in history. Humans are herd animals. When everyone runs, your brain screams, "Run." But the stock market is not the savannah. When everyone is running scared, that's usually the time to buy. When everyone is running greedy, like in 1999 or 2001, that's the time to be careful. In the 2008 crash, Buffett wrote an article titled, "Buy American, I Am." Everyone thought he was crazy. He became billions richer. Will you be the brave one when everyone else is scared? Law number 6. The stock market is a device for transferring money from the impatient to the patient. From 1926 to today, the market has returned about 10% per year on average. Invest $10,000 and do nothing for 50 years, you have over $1 million. No trading, no genius, just patience. But most investors can't sit still. They buy, they sell, they buy back at the top, they panic sell at the bottom. Studies show the average investor earns less than half the market's return. Buffett's favorite holding period? Forever. He bought Coca-Cola in 1988, still owns it. He bought American Express in 1964, still owns it. Why sell a wonderful business? Unless the business permanently changes. The only reason to sell is because you need the money. Check your portfolio once a year, then go live your life. Law number 7. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Early in his career, Buffett bought cheap, dying companies. He called them cigar butts. One last puff, then throw away. He made money, but it was exhausting. He paid taxes every time he sold. Then his partner, Charlie Munger, said, "Stop buying cheap garbage. Buy wonderful companies at fair prices." What does that mean? A fair company at a cheap price. You buy it, you sell it after a year for a 30% profit. Then you have to find another. Sell, pay taxes, buy again. Exhausting. A wonderful company at a fair price. You buy it once, then you do nothing for 30 years. It compounds. You never pay taxes until you sell. You sleep well at night. How do you identify a wonderful company? You already know their names. You use their products. Apple, Microsoft, Coca-Cola, Amazon. Buy them at a fair price, then hold them. Those are the 7 laws. Never lose money. Learn what investing really means. Treat stocks like businesses. Stay in your circle. Be greedy when others are fearful. Be patient.
Buy wonderful companies at fair prices. Follow them for 30 years and you will be wealthy. But laws alone aren't enough. You need the tools, the checklists, the step-by-step plan for when the market crashes. That's exactly what the Complete Investor's Manual gives you. The link is in the description. A tiny price for the days of effort I put into writing it. Get it, read it, follow it, and you will never worry about money again. That's not a promise. That's math. The game never ends, but you can win it.